Hello everyone, I'm Werner Gruner from Get Golden Visa in Lisbon, and in today's video we are going to explore how American investors can navigate the Portugal Golden Visa through the fund investment route. This is going to be a practical guideline. By the end, you will understand how the fund route works, what makes it attractive for Americans, and how to structure your investment wisely while staying compliant with US tax rules. Before we dive in, let me give you a bit of context. At Get Golden Visa, we were one of the first companies to introduce the fund route back in 2019, at a time when almost everyone else was focused purely on real estate. Fast forward to today, after the government excluded the real estate from the program in October 2023, the fund option has become the main investment route for Golden Visa applicants. We've now helped investors from over 25 different nationalities, with the top three being the US, Turkey, and the UK. So a lot of what I'll share today comes directly from those real-life experience with American investors. Let's start with a quick clarification. When we say funds, what are we actually talking about? In Portugal, these are regulated investment vehicles supervised by the Portuguese Market Commission, called CMVM, which is the local equivalent of the SEC in the US. And broadly speaking, there are two main categories: closed-ended funds and open-ended funds. Closed-ended funds are long-term vehicles that raise capital, invest it, and exit those investments, typically in private equity or venture capital strategies. Private equity funds often focus on sectors like renewable energy, healthcare, tourism, or agriculture, amongst others. Venture capital funds, on the other hand, invest in early-stage companies, research and development, early-stage biomedical startups, AI, meaning higher risk, potential higher reward. Then you have open-ended funds, which are a bit more liquid, operating more like mutual funds in the US. They invest in equities, bonds, gold, and even in digital assets like Bitcoin. Each type has its advantages and, of course, its own set of risks. Now, why do so many Americans choose this route? For most, it comes down to simplicity, diversification, and efficiency. There's no property to maintain, no tenants, no renovation headaches, and you can diversify your investment across different sectors and fund managers. In fact, we always advise our investors to spread the investment across multiple funds to diversify risk. Plus, for non-residents, Portugal doesn't tax capital gains or dividends from these investments. That said, as an American, you still need to take care of your US tax obligations, which we'll touch on in a moment. So let's break down the main pros and cons. The advantages first. Well, it's a highly regulated market. Fund managers are professionals with track records. You can diversify your portfolio between several fund types. You can even generate annual dividends, which can help offset some of your visa-related costs over time, such as legal fees and government fees. Now the downsides. So these are risk funds. Your capital is not guaranteed. You also don't have control over when the fund exits its investments, and most funds are closed-ended, which means you should expect to hold them for several years. Lastly, the onboarding process, the KYC, the Know Your Customer paperwork can be a bit demanding, but with the right legal team, it's quite manageable at the end of the day. Now let's talk about the part most people don't tell you, the US tax implications. If you are an American investor, you will want to keep these 3 compliance points in mind. Number 1, FBAR. If your foreign financial accounts, including your Portuguese bank account, exceeded $10,000 at any point in the year, you must file an FBAR. Number 2, PFIC. Most Portuguese funds qualify as PFICs, passive foreign investment companies, and the US tax treatment of PFICs can be very punitive if you don't plan ahead. The most efficient approach is usually the QEF election, but to make that election, the fund must issue a PFIC annual information statement, and not all funds do. So, before investing, always confirm whether your chosen fund supports US reporting. Number 3, FACTA. This is Form 8938, part of your tax return, reporting foreign financial assets above certain thresholds. Think of FACTA as the big umbrella. It doesn't replace FBAR or PFIC filings, it's an addition to them. This isn't tax advice, of course, it's simply the list you'll want to bring to your CPA before wiring your funds. Now that we've cleared that up, how do you actually choose the right fund? Well, we always tell our clients there's no best or right fund, only the right one for your profile. And we look at a few questions together. Do you prefer open-ended funds or closed-ended funds, or a mix of both? What's the target return? And how realistic is it? Are the funds investors only Golden Visa participants, or are there local private or institutional investors as well? What's the fee structure? Upfront, ongoing, at exit? How diversified is the underlying portfolio? And importantly, does the fund life cycle align with your Golden Visa timeline? At the end, it's all about aligning your risk tolerance, return expectations, and liquidity needs. Now, the secret sauce, let me say it like this, of an investment strategy is the allocation. And this is precisely what we at Get Golden Visa do. We help our clients with tailor-made strategies according to their corresponding risk profiles. Let me put it in this way, and some of you who've talked to me will know this analogy. Funds are like ice cream flavors. You've got the vanilla ones, conservative, stable, everyone likes them, not much excitement, but very solid. Then there are the pistachio or salted caramel options, more riskier, not for everybody's taste, but potentially more rewarding. Most of our American clients end up with a blend. Maybe one private equity fund for annual dividends or growth-oriented, and an open-ended fund for liquidity. That's what we call a balanced allocation. Let's quickly go through the step-by-step process, just so you have the full picture. First, you will need a Portuguese tax number called the NIF. Then you'll open a Portuguese bank account. This will also handle the Know Your Client process. Next, you'll select and subscribe to your chosen fund or funds. You will then transfer 500,000 euros from your personal account abroad to your Portuguese bank account, and then to the fund bank account. After that, you will receive two key confirmations, one from the fund, one from the bank, proving that your investment is complete. And finally, lawyers will submit your Golden Visa application through the ARI portal. Simply as that, but each step needs to be done in the right order. Now, I know this is a lot to take in, but here's the key takeaway. If you are an American investor, your two pillars are allocation and compliance. Get those right, and everything else falls into place. At Get Golden Visa, we help you with both. We curate a short list of funds that match your goals, compare them apples to apples, and coordinate with your law firm so your process runs smoothly from start to finish. So if you're considering the Portugal Golden Visa and you want a plan that's compliant, diversified, and aligned with your financial goals, reach out to us at getgoldenvisa.com or drop us a line at info@getgoldenvisa.com. Thanks for watching, and I'll see you here in Lisbon.